Hello, ladies and gentlemen. So I'm back once again. So I really get into this housing thing because we really have a huge issue with a housing crisis here in California, and it's actually seemed to spread. And a lot of this has been happening in a lot of these gentrified um, areas where they're metropolis areas where it's like urban cities that have like either they have football stadiums or they have like sort of like LA has the Staples Center and then Pasadena has the Rose Bowl and places that attract a lot of tourism or attract a lot of um, young uh, I guess young people and people who are making like six figures or maybe even more than that. And they want to live in a more trendy, urbanized, populous area where it's popular for its scenery and if they have like something great to offer, like maybe concert halls, theaters, um, shopping malls and things that are real, trendy. Well, usually the malls are different in the downtown, what we call DTLA, downtown of Los Angeles. A lot of times they look to be more like outlets or they're, where it's open space and people are frequenting the area, especially around the holidays that is fastly approaching us. So DTLA has a lot of shopping areas, convention center, the Staples Center, they have the Disney concert hall, they have a lot of new development and a lot of trendy lofts and I would say a lot of glitz and glamour to offer people. And so home ownership is a big deal, for some people. But more recently, what has been happening, and I think a lot of this really started in 2008 when they had the issue where a lot of people's homes were foreclosed because of predatory lending. So this is entitled, He Never Missed a Payment, but the bank still foreclosed on his home. And so this truly did happen to several people, as a matter of fact, and you're going to be, well, you might not be too shocked when you find out which bank did it. And so I'm about to get into this article because this has happened. It happened a lot. And they're worried that there's more issues that could come about in the near future where people are going to have to really be careful with whom they get involved with when it comes to home ownership. So you've had a lot of young people, what they say millennials, people who are now not really as jazzed about owning a home as it is leasing, a condo or leasing a home or leasing something so that they don't have to get into a situation where they're deep in debt. And so I'm going to take it in a story here of this situation, which is really, really sad because I was reading this earlier today and I said, I know this was happening, but it looks to be that this person and several other people have been complaining that this could happen very often. He never missed a payment, but the bank still foreclosed on his home. Homeowners say that they're being preyed upon by mortgage industry. So he never missed a payment, but the bank still foreclosed on his home anyway. It's where we spend a great deal of our time. And so I'm going to go into this, and you're going to see this article here out of WLTX 19. And so I believe there's a video that's associated with it, but I'm not into playing the video as of yet. And so I'm going to go down and pan down. So he never missed a payment, but the bank still foreclosed on his home anyway. Homeowners say they're being preyed upon by mortgage industry. And so this New Orleans, Marcus Green knows the stress and anger. service agents, each telling him something different, letters demanding a resolution that never comes. And he knows what it's like when at stake is his important possession, okay, his home. And so this is a big deal because right now in most of these places, there's a lot of problems with people even having a place to stay. So this is the guy pictured here. And so I'm going to go into his story. Okay, so here's his home here. Machad believes mortgage servicers have a greater incentive to foreclose on homeowners and sell the properties at sheriff's sales than to fix disputes or modify loans. And so this is pretty important because a lot of people who have wanted to be homeowners, I know some people who've worked all their lives, it seems like, and they just can never afford to get into home ownership. And so this guy, he probably goes into his spiel on what had happened to him. So think of it like a toilet swirling, okay? So once you're in this vortex, it's almost impossible to get out of it, and that's their goal, to push you deeper into that vortex. So, and that's why I think he stated, Machad, that the whole business model is fraudulent because that is their goal. So he never missed a payment. Chase Bank, there's a lot of Chase banks everywhere. They sent his checks back. So Chase and Mortgage Bankers Association, which represents the largest mortgage servicer, say banks are not angling to take people's homes. That's what they're saying, Chase, at the first sign of trouble. So they said that the new regulations that have been put are placed out since the crisis of the mortgage crisis of 2008 have assured that homeowners get every opportunity to modify the terms of their loans, settle defaults, and avoid foreclosure. But Green said that that's not what Chase treated him like. So court records show that he never missed a mortgage payment until Chase started sending his checks, more than 1,000 every month, back to him. So the bank considered those partial payments because it said that his insurance and tax escrow fees had increased. And so the story continues under this photo. So this is Chase Home Finance. It's considered partial payments, stopped accepting the payment. 2011, they foreclosed on the guy's home, Machad. So Chase says that it had offered to settle with Green on multiple occasions, but he has not accepted the terms. So he has mortgaged or managed to keep possession of his home for years by suing Chase for the breach of the contract. So Green is not alone in this. There are other people that also said similar incidences have happened to them as well. So state and federal court files include dozens of dozens of cases and dozens of similar incidences with this bank, Chase, to Green, but most end with an undisclosed settlement. So that's what they do. Usually Chase, they'll do an undisclosed settlement and an agreement not to share the terms. But the records of the homeowner complaints against the lenders remain public. So in one such case, the homeowners agreed to speak with WWL-TV on the condition of the anonymity, so that the bank wouldn't be able to negate the settlement. And so the story continues. So the court documents show that his original loan included a no escrow or impound fees for insurance or taxes. And so the agreement allowed the homeowner to pay those separately. But when his original lender sold the mortgage note to a different bank, the new servicer then started charging escrow fees without notifying him. Before he realized that that is what happened, he received the foreclosure notices. So he wrote, and see, some stuff similar like this happened with Wells Fargo. Wells Fargo had a glitch era, and a lot of people were thousands of people were foreclosed on. And so that's another incident that happened with these banks. So, you really, people are starting not to trust these banks and these lenders. So he went on to say that he wrote letters and spoke to customer service representatives, thought that they would resolve this issue. But then the bank filed a second foreclosure action on him. His credit plummeted from 800 to 300, he said. It was a horrific pain. I mean, for years, you would wonder whether or not the civil service or civil sheriff, civil sheriff would show up at the day to remove all of his things out of his home. So he was afraid that they were going to actually send the sheriff to put him out of his own home. So foreclosure settlements wipe away debt and pay homeowner. So some non-disclosure agreements, and so this is underneath. So in 2011, the homeowner and his wife sued the bank. So like Green, he had kept meticulous records and letters and phone calls and forced the bank to produce copies of its phone logs. So he said that backed his story up rather, and the bank agreed to settle with him in 2013, forgiving his debt and paying him hundreds of thousands of dollars without officially admitting the fault of what they've done. So he and Green urge homeowners to keep a log of every phone call and a copy of every letter that you get from these lenders and these banks. So those documents and the civil lawsuit could be the only way to make the bank back down so that they won't foreclose on you and go along and you won't default. So every case needs to go to court before they can actually proceed with what they're doing, and they need to be exposed for what they're doing, Green said. So the story continues. This is Green right here. So massive mortgage abuses were exposed in 2008 mortgage crises. So after the worthless mortgages that helped cause the crisis were sold in batches to investors, several lenders went bankrupt, and it was unclear who really held millions of mortgage notes. So some banks and loan servicing companies were caught using stamps or robotic signatures on blank, undated pieces of paper to lay claim to original notes. And so Atlanta-based foreclosure defense attorney Stephen Bernstein believes that in one such case led to an unjust foreclosure on a mid-city house Jesse Lee owned for 20 years. Can you believe it, being in the house for 20 years and all of a sudden you have this drama come on you and they foreclose on your home? So Lee and Bernstein said that a blank and undated document attached to Lee's original mortgage note with an identical signature found on other disputed mortgages around the country, justified Lee's decision to stop paying his mortgage after it passed from one servicer to another. So this has been a big problem. So the story then continues, and so there's a video associated with this. So asked how he could justify not making any mortgage payments, Lee said that he had a right to expect lenders to produce proper documentation before paying them anything. So if Chase claims that they own the note, then later on someone else comes along and says, they say that you owe me also. So this is what he was faced with. And then someone else says that you also owe me, Lee said. So you're owing all these people. You don't even know who these people are. So then you have 3 people asking you to send some money. So I'm not going to send any money until you actually prove to me that you actually own the original note. So Orleans parish judges were not willing to accept that argument. So while Lee was challenging the foreclosure in court and waiting for a scheduled hearing, sheriff deputies showed up at his house in May and evicted him and his tenants. So it really did happen. Took place. So Bernstein said that that shouldn't have been allowed. So he said that Louisiana courts are notorious for accepting bank arguments carte blanche. Okay, so the laws in Louisiana are very antiquated. They're very ambiguous and leave a lot of room for the banks to file fraudulent papers before the court, he said. So unchecked during the financial crisis, foreclosures spiraled out of control early in the decade. So at one point in 2011, an average of about every 45 homes nationally were in some stage of foreclosure, according to an online foreclosure marketer, Realty Track. So the rate was lower in Louisiana, but still peaked at about 1 in 100. And so this is really horrible. So this has happened. Foreclosure in 2011, 1 in every 45 homes in the U.S. and 1 in every 100 homes in Louisiana. And so in 2010, Congress stepped in and imposing the new consumer protections and creating a new Consumer Financial Protection Bureau to regulate lenders. So some of the protections, including the Home Affordable Mortgage Program, which is called HAMP, which required lenders to provide loan modifications to the people that are struggling to pay, have been allowed to expire. The mortgage industry talks openly about erasing some of the regulations overseen by the CFPB. Bernstein fears mortgage lenders are going back to their abusive ways again. And so this is what I was talking about, that people are fearing that it's going to go back into the same thing again, but in other ways, and people are going to end up losing their homes again. But the Mortgage Lenders Association said plenty of regulations are still in place to make sure that those days are over with. Complaints are piling up, though. Data compiled by WWL-TV shows that consumers are making a lot of mortgage complaints. And this is happening now, but the number of complaints is trending downward each year because people are really becoming aware of what these lenders have been doing, and they're holding them to this, and they're probably keeping documenting and being a lot more careful because of what happened in 2008. So Louisiana homeowners made more than 2,200 formal complaints against the mortgage lenders and servicers, either to the state and Attorney General Consumer Protection Division, which is, or to the CFPB, okay, which is the same thing. And so that is what they've been talking about. But it goes on to say that the complaints against the mortgage lenders and servicers, either to the state and Attorney General Consumer Protection Divisions. So this has happened in the last 5 years. So complaints of Louisiana. So among financial services regulated by the CFPB, only credit reporting and debt collection produce more consumer complaints than mortgages. So the CFPB receives more complaints about mortgage lenders and loan servicers than about all other kinds of loans and credit card combined. So where we spend a great deal of our time, CFPB interim director Mike Mulvaney said in the recent interview. So the story continues underneath the photo here. So it's becoming a big issue. The mortgage industry sees Mulvaney as the ally who is working to cut back some of the CFPB's regulatory powers. President Donald Trump's in the mix here. Budget director railed against the agency he now leads when he was in Congress, bewailing its continued association with its architect, Democratic Senator Elizabeth Warren of Massachusetts. In recent interviews during a trip to Baton Rouge, Mulvaney acknowledged recommending some changes in the Bureau's powers, but he still wants it to crack down on the mortgage abuses. So folks who will scam you will go to every length to scam you. And that could be somebody operating out of their basement, or it could be somebody working at a major financial institution. He said, there are bad people out there, and to the extent that we catch them, we will bring them to justice. Okay, so the CFPB did just that by fining Wells Fargo $500 million as a part of the $1 billion settlement earlier this year. The largest number of mortgage complaints came to the CFPB came from Wells Fargo, that had been filed against Wells Fargo and what they had did. The bank has agreed to pay billions of dollars in fines this year for the slew of scandals, including charging unfair mortgage fees and issuing home loans with incorrect information. And so Wells Fargo has said those fines were for practices it engaged in decades ago during the mortgage crises. It has been trying to brand itself as reborn in 2018 to try to move past scandals involving mortgages and millions of fake bank and credit card accounts. The story continues under the photo. So LA mortgage complaints, Wells Fargo, Ocean Loan Servicing, and Chase Bank. These were the biggest ones that, some of the biggest ones. New Orleans bankruptcy court judge Elizabeth Magner is one of the few judges who has consistently cracked down on mortgage abuse. So she fined Wells Fargo $3 million for a single case in which the bank increased the New Orleans homeowners' monthly payments without notifying him at all. So she also blasted Oakwyn. It's not Ocean, it's Oakwyn Loan Servicing, which collects mortgage payments for banks, including Wells Fargo and Chase. So it's OCWEN, Oakwyn, receives the second largest number of consumer complaints. So Chase is the third one that receives the most consumer complaints, and it ranks in third. So Magner has testified before Congress about the abuses in mortgage industry and why the banks need to be watched. With each revelation, one hopes that the bottom of the barrel has been reached and that the industry will correct or self-correct itself, she wrote in one court decision. So sadly, this does not appear to be the reality. Sadly, this does not appear to be the reality, which means, people, this may happen again, or may be happening all over again. And so they do mention this guy. The mortgage industry sees Mulvaney as the ally who is working cut back some of the CFPB's regulatory powers. And so they basically want to take things back to the way they were. And so this is problematic. And so this is why the complaints are starting to creep in. And so this is what their concerns are about. And so I think there's a video that is associated with it that goes in depth detail about this whole situation. I don't know if it plays. If it does, I'll play it. If it doesn't, it's pretty much what I've been saying, but it shouldn't take very long. So let me see if I can redirect it back to where it was. There may be an ad. So a lot of the ads are popping up because today is election day, and so a lot of people were voting, and so there's a lot of people that are interested in who was selected. You know, and so a lot of my feeds are talking about the voting. And so I'm going to try to go back and start over. And the video will play.
In our series, Watching Your Wallet, we've told you about scam artists and economic criminals who prey on your money.
But the problem isn't limited to individual fraudsters. Investigative reporter David Hammer found big financial institutions can take advantage of you too. David joins us now. David.
Tana, Natalie, Katie Moore and I have been collecting and analyzing the most comprehensive consumer complaint data in the state and found more than 1,000 Louisiana homeowners have filed formal complaints against mortgage companies in the last 5 years. Some of them allege the banks are committing fraud, trying to take away their most important possession, their home. The customer service nightmare. We've all been there before.
Thank you for calling customer service hotline. How may I help you?
Whatever you tell them, they just don't hear. because they think, well, they're not on my level. This nightmare gets really scary when the complaining customer is a homeowner and the service he's complaining about is his home mortgage. They don't care about people. They care about Green. and you know, they don't care who they are. Marcus Green knows firsthand. Hurricane Katrina destroyed his New Orleans East home, but he used his flood insurance money to rebuild. Through all that, he never missed a mortgage payment, almost $1,000 every month. But in 2007, his lender, J.P. Morgan Chase, suddenly increased his escrow fees, first tacking on additional flood insurance, then charging him for an erroneous property tax bill. Phone records and dozens of letters show Green trying desperately to fix the issues over several years. Oh, it was to the point where I didn't do anything but stay on the phone with them. A proud retired Marine, Green didn't want to back down, but he also kept paying Chase what he thought they wanted, over $1,000 every month. But Chase considered them partial payments, and eventually Chase stopped accepting Green's payments entirely. In 2011, the bank foreclosed on Green's home. They said, oh yeah, we're going to get this house. I said, you going to get this house? They said, yeah, we're going to get this house. I said, well, is there anything I can do? I said, well, is there anybody I can talk to? They say, no. Green has stayed in his home by suing Chase and alleging fraud, and he's far from alone. State and federal courts are full of disputed foreclosure cases. Banks often end up settling these claims, wiping away the debt and paying the homeowner cash. But they also require them to sign non-disclosure agreements to keep the details quiet. That's why this man needed his identity hidden.
They foreclosed on me even though all my monthly payments were being made.
Like so many other loans, his was sold to a different bank, which then changed his payment terms without his consent.
My credit plummeted from 800 to a 300. It was horrific pain. I mean, for years, you would wonder whether or not the civil sheriff was going to show up that day to remove all your things out of your house.
He took the bank to court, but before his case could go to trial, the bank settled, dropped the foreclosure, and agreed to pay him hundreds of thousands of dollars. In 2011, a staggering 1 in every 45 homes nationally were in some stage of foreclosure. In Louisiana, the problem wasn't as bad, but the rate got as high as 1 in 100 homes foreclosed. Congress responded with new federal consumer protections, but Atlanta-based foreclosure defense lawyer Stephen Bernstein says Louisiana laws are still slanted against borrowers.
The laws in Louisiana are very antiquated, they're very ambiguous, and leaves a lot of room for the banks to file fraudulent papers before the court.
Mortgage disputes in Louisiana are the third most common complaint to the Federal Consumer Financial Protection Bureau, trailing only credit reporting and debt collection. There are more mortgage complaints to the CFPB than every other kind of loan and credit card complaint combined.
It's where we spend a great deal of our time.
CFPB Interim Director Mick Mulvaney and his staff issued a $1 billion fine against Wells Fargo for its mortgage abuses earlier this year. Wells Fargo is the #1 target of mortgage complaints in the state. Chase is third.
The folks who will scam you will go to every length to scam you. And that could be somebody who's just operating out of their basement. That could be somebody operating at a major financial corporation. There's bad people out there, and to the extent we catch them, we're going to bring them to justice.
But when he was in Congress, Mulvaney famously tried to destroy the bureau he now oversees for the Trump administration. The mortgage industry openly cheers for him to erase CFPB's regulatory powers. And he has recommended some changes to CFPB to Congress.
So as long as we're willing to exist, I think we need to be the best bureau that we can.
A federal program launched after the bank bailout to get lenders to do loan modifications instead of foreclosing expired in 2016. And now data show a third of all Louisiana mortgage complaints are focused on those loan modifications. Bernstein believes lenders have been emboldened to go back to some of the fraudulent practices captured in the 2015 film, The Big Short.
That's not stupidity, that's fraud.
And I can assure you, whatever happened in The Big Short is alive and well in The Big Easy.
That's why these folks say you should protect yourself whenever you deal with your mortgage lender.
Make sure you document every conversation, find out who you're speaking with, date, time, because all these conversations are recorded.
Every case needs to go to court, and they need to be exposed. Now, as you can see, Green is dug in for a court fight. Chase Senate has tried to work with him to settle his claim, and he's not been willing to do so.
Well, David, is there a way for homeowners to know which companies have the most complaints?
Yeah, we've put together a list and actually a search engine on our website. They can search a database of complaints to the Louisiana Attorney General's Consumer Protection Division. You can go to wwltv.com and you can search by industry, company, zip code, location, all of that.
Yeah, it's fascinating, especially when people's homes are at stake. All right, thank you, David.
And so that pretty much sums it up for some of the issues that are really starkly true, and it's an unfortunate. So it seems as though we're slipping down that scary slope of people being preyed upon by these mortgage lenders. So you have to be really careful, because they're really the way it looks is though that some of these people are in it for the money. And that concludes this video. Like, comment, subscribe. Antoinette 70. Thank you for listening.